Hey, what's going on, guys? It's a little late in the day. I said I wanted to get this video out, so here we are getting it out before the end of the night. And this is going to cover. I was planning on doing a longer video, but I don't know if I have it in me to do a longer video. So I just want to put this short video out, and then I'll expand on this over the week. And we have some time left into the end of the month, so hopefully you guys will understand sort of the method that I'm applying going into October and my idea around trading alts and how I'm going to be positioning. So this is with respect to the idea that a strong September, a strong monthly turnaround, strong high time frame turnaround is likely to have some inertia to it. And off of a strong September, my expectation is that you have a strong October as well. Now, no guarantee whether or not October's returns are greater than September's. A lot of these alts are up significantly. But my expectation is that we'll see positive returns in October for the months, or rather in the pairs that had strong Septembers. And again, I posted about this on Twitter. I said, big ships turn slowly. And basically, the idea is that when they turn and when they begin to pick up steam again, it's difficult to get them to just about face and continue on their original path. The original path in this case for alts has been, a multi-quarter, multi-month, multi-quarter downtrends. It's been a really long time now since alts were at their all-time highs. So the idea behind this trade is that I don't think there's a lot of like idiosyncratic reasons to be long alts, or honestly, maybe to be long crypto as a whole yet. I think crypto is one of those things where it's like slowly builds up momentum over time and starts breaking levels. This could be just based on people that have been in this market redeploying, and then once much higher prices come, that's when we start to see some of the more idiosyncratic narratives take footing and capture attention. But this trade right now it's based on the idea that there have been some really strong plays this month. That there is all sort of this is sort of all, rather I should say, one trade taking place. And you could kind of, if you want, you could call it high time frame mean reversion. You know, the markets have been moving down for quite some time now. Alts have taken a beating. A lot of alts are over 80% off their all-time highs, approaching their all-time lows, their original ranges before they put in their moves through 2023 and into the beginning of the year. So if anything, some of these are they're just mean reversion trades. And I've talked about this in the past where an alt might be absolutely shitting the bed and be vapor, but there's a lot of times when you'll see, even after a drawdown of almost 90 plus 95 99%, those alts can bounce up and cover sort of half of that move, and it doesn't even have to be for a significant reason, right? It could just for people all paying attention to it again, shorts coming off, it being relatively easier to move up at this point because you've taken out a lot of the long positioning. It it becomes a pretty self-fulfilling trade. So I have a watch list that I'm looking at. A lot of it's pretty basic. I mean, a lot of these are popular pairs or liquid pairs. They've done well for the month. Some of them are part of what I think or anticipate to be narratives that will be strong moving forward. And it's kind of just the same old, right? I don't think that the participants in this market have changed. I think until you have some major turnover in participants, you could expect that their interests will remain the same. So, it looks like, for me, I mean, it looks like memes and AI. And if anything, maybe memes are going to get, I don't know, maybe memes, maybe it's hopeful or wishful thinking. I think maybe memes will begin to fall out of favor as this market matures over time. I don't think, institutional capital is going to want to be deploying in memes as much as they will want to be deploying in things that have a little bit more substance to them. But anyway, that's like my personal opinion coming through. And if prices continue to rip up, like that doesn't mean anything as far as like memes continue to outperform. So with regard to the alts, so you can see that I have this watch list right here. A lot of these alts, like not for nothing, some of these alts I think are a little bit sketchy. Like I've talked about Celestia in the past. Celestia is looking at a significant unlock. There is something to be said for creating higher prices before an unlock for early investors. Those early investors will hedge into that. And this is something that you have to be mindful of. Like, I think that Celestia on after an unlock, if you have some kind of backside setup where there's a breakdown, I think it's definitely something you want to at least take off leverage exposure, or potentially even see a short setup within. But a lot of these alts are, we've seen a good amount of positioning come in behind them. And I don't think like we're in free ride territory yet. I think if Bitcoin is above 65, it's a little bit more clear. If we have a change in market structure with BTC and Bitcoin hasn't been able to do anything different, it's very close to making at least locally a new high. But for all intents and purposes, it's been a series of lower highs and lower lows all the way to this point. This is like the first time where it kind of looks like, if at least if we start grinding back up towards today's highs, yesterday's highs, is sort of like 3 days within balance, 3 days in relative to the same range, I should say. It's not necessarily like they're balanced days. Then it would be maybe a candidate for sort of hugging that resistance level, grinding against that level, and then at that point, maybe it's an instance where maybe betting on resistance breaking and being a part of that break a little early might make sense. But as it stands right now, like, resistance is doing its job, and I think that if BTC were to break down and to test lower and to test below 62, break below 63 convincingly again, I don't know how strong alts would remain in the face of that. So I think you have to be mindful of that. Bitcoin does, I think, still rule the roost. And when Bitcoin looks relatively stable, like, alts have sort of permission to outperform. Now, mind you, my point about the high time frame chart is that this is the time when I do think that, if the market is going green on the monthly and sort of the highest time frame charts you could think of, and that momentum to the downside has shifted, there is something to be said for Bitcoin pulling back even, and alts not necessarily pulling back. And that's a sign that I think you really want to pay attention to when you do have those alts where, let's say Bitcoin pulls back to 62, 61, even deeper than that. And if you have alts that have been outperforming and they are still holding their levels and they're above prior resistance, now turn support, and they have less downside capture than BTC, I mean, that's as good of a signal as you're going to get. But as far as the individual alts, I mean, you're looking at this right here. It's Solana, Pepe, WIF. So we have a meme on Ethereum. We have a meme on Solana. We have Fetch AI. We have Near. WorldCoin. WorldCoin put in a significant day today. I think that everything is more or less doing the same thing. So I want to be mindful of that. So breaks of local structure have led to continuation pretty much across the board. And I don't think the rug is going to get pulled out yet. So I think WorldCoin is worth paying attention to, because I think this is probably going to follow in the same path that every other strong coin has been for the last week and a half. Tau, of course, Su and Say, Tia, Phantom, and Immutable X. Now, as I said, it is worth noting, like, there's a lot of, I mean, if you look at WIF, for example, the market is getting pretty busy behind these moves. So there does look like there's that sort of pre-positioning that you would anticipate when things look really bullish, and what is more than likely is that you wash this out. What I will say, though, is because of where we are and because of how much these have been washed out to this point, I wouldn't just look at something like this, like an increase in open interest that's this jacked up, when we're sitting at resistance like this, and say, okay, this is we have to wash this out completely right now. It's more than likely that you're getting shorts in this as well, and getting people in this as well that think that there's still good opportunities to sell these and to hedge, portfolios with alts, and to, basically impose their beliefs on further downside right here off of this bounce, thinking that it's, potentially just a lower high in the making. So I think you have a significant mix rather than just one-sidedness. Now, what that to me means is, like, this could eventually wash out, but I think that what's more likely is that the open interest that you see right here, most of it can remain. We'll have a further pop up. We'll see something where a little bit of that washes out, and it won't be the case that we're just looking at a market that's likely going to just give back everything immediately, like we have more recently, right? Like up to this point. And again, I think that that's because things are starting to transition on the high time frame, and sort of just imagine not even just the chart high time frame, but from a high time frame perspective, I think we're starting to have enough of an imbalance where supply is left, weak hands, and it's back in a position of maybe more firm hands, and it's unlikely that we're going to see sort of that same extreme PvP behavior with alts. So if it's strong right now, I would sort of extrapolate on it being strong again, like I said, into the month of October. That's sort of like what my thinking is, and I'm going to go into specifically how I'm positioning for that. rather how I'm positioning and how I'm going to execute around that, and sort of how much wiggle room I'm going to give prices. Because I said, September 29th being the first week that goes into October. Um, if we're going to get a pullback and October is going to be strong, or rather, if October is going to be strong, I think that the pullback that you get, basically the wick that's created, I don't think that it gives back much more than 10% off the September close. And I don't think it's going to happen. I think if it happens, it's going to happen in the first week. So I'll get to that in a second. But just looking through some of these, you do have a good amount of positioning that's come back into the futures market behind them. Some of them do look a little crowded. So if you look at near, for example, and this is based on coins, right? So we have a high here. We're basically just slightly above that high. You can see how much open interest is jacked up. Now remember though, this is also capital just coming back in, right? Capital coming back into the market that was, is looking at potentially the first significant change. And I don't know if you could look at this as you might have in the past, where you had these big pops up and open interest out of nowhere, like a rate of change is off the charts, and you just anticipated that would get washed out. You have to also remember that there are people that would just prefer, and for good reason, to get in position with perps, because a lot of the times they're more liquid, and just because they're using leverage doesn't mean they're under collateralized. So it's not the case that everyone who is in this open interest is using 100x. You could have a good amount of positioning here that is built up that has no liquidation, and this person is just executing through purpose because, again, it's a more liquid market. So if we look at FTM, sort of same story. Open interest is starting to come back into these markets, and I think it's basically, you could start to say interest is coming back into these markets, even though that's obviously not it's not the formal definition of open interest. But just if you think about it that way, it kind of makes sense also. So yeah, you have to be mindful of this, because I don't think we're in free ride territory. There is positioning getting behind these, but I think it does for a lot of these, it does depend on sort of what BTC's path is. So specifically for these alts, and again, I'm not going to go over each individual one. This is the watch list that I'm looking at, but the idea for the trade is it's pretty much all the same across the board. I have these alts picked for a specific reason. I think that these are the likely ones, or likely candidates to carry through off of September strength. And the idea, again, is that a turn on the high time frame. So if you look at something like, SU is absolutely ripped. If you look at something like TIA, Say is a good example. FET is a good example. WIF is a good example. We'll stick with WIF for this example. The first time, or we'll stick with what's it called? I don't know if I already put it on there. Oh, I didn't put it on there. Okay, so I had a chart where I actually had. We'll stick with TIA. It's fine. I had a chart with. Was it Say? Oh, I guess I don't have any of them. Stick with Say. Okay, so I had a box set up already, so I didn't have to redraw everything. But the idea for these, for me, is pretty simple, and I think it comes off of, one, having an understanding of market participant behavior, being around long enough here, having an understanding of positioning, knowing what it means that the market has moved down for this long, and how that has, how that reflects positioning, and how easy it should be for this market to continue to move up, at least for the interim. And even if this market was going to continue to move down, remember, markets don't move in a straight line. They move like this, right? They move, they take they don't really take a tight path anywhere. And if you trade leverage, you should obviously understand that, because leverage is path dependent. Or for most people using leverage, it is path dependent. That's why you should be using options in many cases. But either way, all right, I don't want to lose my train of thought. So the idea is that this is the first turn in a while. It's likely to capture a lot of attention. On a lot of these, you've started to retrade back above prior levels that we've had trouble with in the past. So if you're looking at this on the monthly chart, you can see very easily on the daily chart how, for example, on Say, we're making new highs, right? Breaking out of a range, price has been without a bid for a really long time. You've had multiple moves down that, sometimes I hate when that happens. If you have like a different chart format window setup, it'll pull up like an old, what's it called? Like indicator template. Here we go. I just want to keep this with nothing on it, naked. So retaking local highs, right? You put in a higher low. This is like the daily, the month, the weekly. And the monthly chart makes it really clear, right? So my idea is that the same way that this had inertia on the way down, this on the way up, this on the way down, you could expect that on a turn like this, especially when you're sending a signal like this, from a market structure standpoint, kind of like where we are exactly in the big picture as well, right? After the first rate cut, going into an election cycle, going into an election relatively soon, as long as stocks are going to continue to move up, I think that crypto has a decent runway, right? So there's, from a sort of a existential standpoint and a supply standpoint, there's less in the way, I think, of the market moving up. And again, like I said, this could just be a bounce here and then move down, but this move still makes sense, right? This sort of mean reversion on the high time frame. And things scale up, right? So low time frame mean reversions, you scale the market up and you get the same thing, the same behavior on the high time frames as well. Unless there's some kind of catalyst or, stock, some kind of news with regard to an equity that'll send that shit to zero like in an instant, and you're not expecting it to cover the ground. But for the way these trades, the commodities, or these trade like commodities and just shit coins, a lot of the times, like I said, you could get a bounce that covers 50% of this move, and then it'll continue down and sort of do that ad infinitum until you get that that structure that just looks like a bouncing ball over time. All right, anyhow, so let's say we continue to close out September like this, really strong signal to the entire market. This is my idea, and it's pretty simple. I am looking at the September close, and I'm giving price, and I know exactly this level right now. I'm giving price about 10% into the October open. What this works out to be is the half of the weekly ATR, right? So I've gone over what I use ATR for in the past. I've talked about this in YouTube videos. I've talked about this on Twitter. I've talked about it in the Telegram as well. So my idea is that the market shouldn't give back more than half of a weekly ATR if it's going to continue to be bullish through the month of October. Right, so a lot of the times this actually lines up from a market structure standpoint. And I said the other day, I said I'm looking within 10% windows. So the point is, if the trend is going to remain forward, we shouldn't get a dip below what is in many cases, a half of a weekly ATR, in my opinion, in that first week. Right, so the idea is you should put the low in the first week. And I talk about in strong trends, like if you look at stocks, for example, a lot of the times the low is put in within the low or the high is put in with the first hour of the day. Now, from a context standpoint, if things are really bullish, you can imagine that maybe there's a little bit more one-sidedness in terms of which you interpret is going to happen, whether or not it's the low being put in or the high being put in. So sort of extending that train of thought to this market and seeing this countless times, I think that the first week of October it kind of lines up, right? So you would see the low put in there, and if we're going to get continuation, I don't think you want to dip more than half of a weekly ATR. If we dip more than that, it kind of just looks like it's the same activity, right? And nothing has really changed, and you're just giving back. You're giving back a lot, and it also, again, like I said, a lot of times this would violate the market from a structural standpoint as well. So if we look at, this, for example, 10%, 45 down to 40, let's say if we closed here, that is, what did I say, 45 down to right around 40. Look at the weekly ATR, it's 0.11, right? So this is the average true range, and this is looking at a weekly chart. So, pulling back into that level, right, around 10%, puts us right around back at the range highs. And again, this works perfectly for this because we haven't closed yet. But regardless of where this is, the point is, off of a strong move, I don't think you should give back much. So high time frame structure sort of scaling up like we would in low time frame trades. A half a weekly ATR is, I think, all that you're going to see give back if this thing is going to continue to move up. And this is evidence in the past in really strong monthly trends as well. So the idea is, once we close out September, a lot of these I said I have starter positions on. So the idea is once we close out September, I'm going to be looking to add into that first week off of this premise and off of this method. So for example, Wild, which I think might just be getting started for its mean reversion bounce. If we give this a 10% pullback, and we're looking at it on the weekly chart. This is on the monthly chart. What it looks like on the monthly, you're basically looking at a monthly engulfing candle, which is a really strong bullish signal. Look at this on the weekly. Look at ATR. You're looking at from 214 down to 190, so about 24, and half of that is, that's actually even less than that. But I think the idea is relatively clean, right? So strong monthly change in market, excuse me, strong change on the monthly. And if you look at a lot of these, are starting to retake moving averages, or at least they're starting to fan out, flatten out, and to trade back above. And the idea is to redeploy based on this. So it's not a very complicated approach. And again, like I said, I'm treating this as more or less all one trade. So if we look at FET, for example, this is a great example. Really strong monthly move. We closed out here, we closed out here, still just giving this right around a half a weekly ATR, which for most of these works out to be about a 10% move down. So the month of October, let's say month of October opens, we start pulling back into local market structure, into prior high. I'm keeping this in mind because I have seen this in the past, sort of seen this exact behavior after these monthly turns, and notice that you don't really, the first week, the low's getting put in, and you're off to the races, obviously, after that. And like I said, I don't think that it's necessarily the case that you're going to have, returns in October that exceed returns in September, but I just think it's more than likely that a lot of these are going to have a little bit of price inertia. And whether or not these things move to prior all-time highs or just trade back up to 50% levels, I do think you have to be mindful of these. So, for example, if we're looking at something like Fetch, and let's say this was like an echo bubble or dead cat bounce, I think you have to look at the 50% move after such drawdowns, right? So if you look at Fetch, and it was a drawdown of about, to this point, just around 80%, a bounce up to the 0.5 level, if you're looking at halfway point, basically using a fib for that, is not uncommon, and it's not uncommon for that to happen and this to just continue down. So being mindful of that as well, and not just blindly holding these, anticipating that these are all going to run back to prior highs. So I hope that makes sense. It's incorporating high time frame ATR. It's based around the idea that a strong change on the high time frame chart like this isn't something that just should, a lot of times you won't see this fizzle out immediately. You'll at least have a follow-up month that's green. And again, like I said, it's not the case that some of these, if you're indexing across the board, some of these, if you had a 30% move in September, maybe it's a 11% move in October. But I think this is just a trade that I'm more or less applying mechanically based on this criteria. Yeah, I'm anticipating that it does well. So hopefully that clears that up. I wanted to do a longer video, but it is a little late, so I figured I'd get this out there. But I'll hop on either tomorrow or the following day and get a little bit more into specifics, intraday stuff. I mean, looking at BTC right now, again, at that 65 level, hovering that 65 level, you have 3 back-to-back days basically within the same range. So relatively equal highs, relatively equal lows. This thing is, it's a good candidate actually to just chop around and continue to fuck with people. Be mindful of stocks as well. Stock behavior right now, things are a little thin. Chopping people up on that side of things. If you look at, I shared more recently on Twitter, someone bought a decent amount of premium on the 55K strike at the end of October. So spent around $1 million. I don't know if that's an outright, so anticipating that the market's going to drop before then. You do have to keep in mind some of these economic releases, though, because I think that there's a good chance, even though we've had the cut, there's still debate on some people whether or not we get a hard or soft landing. So if it's a hard landing, the markets aren't necessarily pricing that in right now, so you have to be mindful of that. And I think that covers it. So everyone have a fantastic evening, and I will talk to you soon.